All right, guys, we have a chart of Tyler Technologies up here. It's a long-term chart going back to the Great Recession. This company basically supplies software services to public sector institutions, so governments, schools, that type of thing. So from the basis of getting paid, there's definitely a lot to like here with this company. As I've said, Tyler Technologies, you can see the long-term multi-year trend line here that goes back all the way to 2010, and it hasn't been violated. We have come down here like practically every company over the past month, but we have not done any technical damage to the long-term chart here in Tyler, which is encouraging. It definitely is showing strength compared to a lot of other industries. So we would think that we would at least test this, especially if volatility continues. We would test this trend line, but that trend line is going to offer a lot of support here before maybe launching higher from there. We can see also in the RSI momentum oscillator that usually if there was further declines to come, we should be seeing a divergence here of momentum, but we're just not seeing that. So that's encouraging from an initial standpoint. If we go to a more short-term chart, we can see that shares topped here in mid-February. We came down and basically bottomed at the end of February before coming back up at the start of March, and then we got caught. Shares got caught in with the two punch, so to speak, the punch of the coronavirus and the punch of the oil price, which really impacted a lot of equity markets worldwide. But we believe we could have a short-term double top pattern here. So basically we top, we come down, we go up and test again, we fail, and we come down again, as we see here. Support, that end of February support failed as we came down in March, and then we basically formed a multi-day bottom here, which has definitely formed a daily swing by now. We bottomed on the 18th of March at close to $250 a share. We're now trading at up around $300 a share, which is a good 17% north of where shares bottomed just a couple of weeks ago. So because we think we have a double top pattern here, we would think that this will play out. We basically go up, come down to the bottom of the V, up again, fail, and then come down, and probably it may have touched it today. It'll depend on how equity markets play themselves out over the rest of the week, but we did get up to this resistance point today. So if we turn over on the open tomorrow, which will be the 1st of April, well then there's a good possibility that shares will go back down and test these lows that we saw in mid-March here before ramping higher, hopefully. Now all of this is obviously subjective to what the S&P does over the next month or so. Do we have a V-shaped bottom, or are we going to retest the lows that we saw there a couple of weeks ago also? But we do like Tyler, from a growth point of view, it's really increased its subscription base, growing a lot. Its recurring revenue streams are growing a lot. Margins will expand here going forward. So, the play here may not be the short that would probably net a trade or something like 15 to 20%. The trade here, obviously the markets have to cooperate, but the trade here we would feel would be getting in somewhere around here and going long. Okay, I'll see you in the next video.